Hey traders and investors, Serge Berger here. Today we're going to have a look at a possible trade for Microsoft into and through earnings. Microsoft's due to report earnings Thursday, October the 22nd. Before we get into the actual trade, let's have a look at the chart of Microsoft. Here you get the long-term weekly chart, i.e. weekly increments, and what you can see is that basically Microsoft, for the better part of the past, let's call it 12 months or so, has essentially consolidated in what I think is a constructive pattern, right? If you then look at it back to its all-time highs in 1999, you can see that we're sort of coiling up below what was an important coiling up point there as well in 1999 before it sort of had this breakout fake out move. I think this time around the consolidation is much more constructive. We didn't go vertical into that point, and I would suspect this consolidation move ultimately should be able to get the stock back to 60 bucks over, let's call it 1 or 2 years or so max. So that's the big picture. Let's have a look at it the more near term, which is really what our concern is here. And you can see this consolidation phase. You can see what's happening here is at the bottom of the range continues to get rejected fairly nicely. On the upside now, we have what I think is very well defined resistance. We've partially broken above it. You can draw these resistance lines in many ways, but you can see what's happening here. We're coiling up and potentially for a move that could get the stock towards the $50 area, which is kind of what I'm looking for here after earnings. So if you look at Microsoft, it doesn't always move a lot after earnings, but it does have this potential of moving anywhere between $2 and about $5 or $6 or so. So if we take it, let's say a $3 move this time around gets us to just about the $50, $51 area to the upside, and the downside gets us a roughly, let's call it back down to 45 or so. So that's what the setup looks like. Let's look at this through the options. So the stock's currently trading around 47.80, call it 48 bucks, just to make things simple. And what I've done is I've looked at December options, and what I took a look at is sort of how can I express my view, which is bullish into earnings, but I don't want to take an outsized risk. So if the stock were to fall apart, I can kind of hedge and maybe even make a little bit of money. So what I did is I did a sort of straddle of sorts where I bought more calls than I did puts. So what I did is I bought, and I did this here 2 times. So I bought, or 1 time I bought, for illustration purposes, I bought 2 48 strike calls, right? And I bought I bought 1 40 strike put for every 2 calls that I bought. That'd be the easy way to put it. And you can see the skew, or sort of the payoff diagram, has this skew which is more favorable on the upside, right, than it is to the downside. In other words, I'm going to make more money on the upside than I am on the downside, because obviously I have 2 calls versus just 1 put. But the payoff diagram is quite simple. So right now, stock's trading around 47.80-ish or so. Stock starts moving up from here, and I pretty much start making money pretty quickly because I have twice as many calls. Particularly if it starts moving past sort of the $49 area, it starts getting more significant. On the downside, stock breaks below, let's call it 43.50 or so, I start making money there as well. But anywhere in between, I'm probably going to lose a little bit of money, not much, but a little bit of money, because implied volatility I suspect will come in after earnings, and B, maybe a little bit of theta to kick in, but it's really more the implied volatility that's gonna take place here. So that's the trade. I think it's quite interesting if you have a view that the stock's going to hold up, maybe a rally after earnings. This is a decent trade to do, and the way I would exit this is if the stock goes nowhere and stays within this range, I would probably pretty quickly close my puts, keep some of the calls, maybe roll my calls forward into the new year. And if we rally above 50, I'll probably take full profits, close the trade. If we fall apart and we start making money on the downside, I'll probably close the trade as well. So I hope this makes sense, guys. Please like this video, subscribe to my channel, and I'll see you in the next video.